The strategists are all wrong. The earnings are not going to fall apart in 2023. Well, oh, you get this data today, and it says, ugh, this is not good for the economy. Maybe they're right. So people are lightening up on positions, and this is what I call the valuation problem for the market. Prices are high, but earnings are coming down. So strategists think earnings are going to go down 6%. That's a forward multiple of 19. That's a problem. When you get over 18, you have major problems because the historic average is 17. And when you're over 18, it's .com. It's 99, 2000, 2017, 2020. That's about it. To have a multiple at 19 or 20, you've got to argue that the economy is improving. You've got to argue that earnings are going to be improving. You certainly can't argue earnings are going down and the economy is going down and I deserve a 20 multiple. They're going to think you're a crazy person. So you see today, Carl, really right across the board, we're down just about 2%. Yes, some of the more defensive areas like consumer staples are down 1.5%. But don't kid yourself. This is just a lightening up right across the board from all of those people who are out there saying, aha, no, the crowd that thinks we're going to have a harder landing is completely wrong. It's going to be the soft landing. And now it's a little harder to make that argument.
Appreciate that. Good setup for our next guest, whom you know well. Let's bring in UBS Director of Floor Operations, Art Cashin. Art, hope you don't mind the late request to talk on the phone, but we are curious to know what you think is going on here. If this is just some swirl within a range, or if we really are resetting some longer-term economic expectations.
Well, a couple of things, Carl, and you know because you get to see my daily pre-market comments every day. I've been writing for about a week that there's a cycle in here that indicated we might see an interim low between December 13th and December 21st, and this may be that test going on. The key here is the 3,900 level. We've been testing that all morning. If it holds, we'll be in good shape. If it breaks, we can have a problem. Now, we got a little help, or the Bears got a little help this morning from Christine Lagarde when she announced that the ECB had raised rates. She said something like, the market is clearly underestimating how high we're going to have to raise rates to cut inflation. That scared the heck out of everybody in Europe, and the yields on European bonds began to spike. Now, we already had weak economic data here. We were softer. That led to these lows. That spike in European rates led to these lows. Now, I don't mean to hog up the whole thing, but let me get this out because today is very important. Number one, you got to try and hold the 3,900 level. If you break 3,900, be careful as to how the rest of the day goes. If it develops into washout selling, that raises the possibility that you could get an extension to get new selling on not Friday, but on Monday and Tuesday. So if you've been doing this 60-some-odd years, as I have, you get to see these patterns develop. Now, there's nothing certain about that. That's probably, at best, a 10% risk. But watch how they close today. Did they hold 3,900? Did they get a late-day bounce back? If they, in fact, break and get heavy selling and you get a washout day, you have to be a little bit careful as to see whether it extends into Monday and Tuesday. But right now, it's all about the market taking its own pulse, taking its own temperature. It's almost all internal.
Do you think the possibility that we do bounce on Europe's close today is important?
I think it will be. Perversely, what you could get, if Lagarde scares the Europeans enough, you could get an accidental flight to safety. In other words, the people in Europe say, holy smoke, we're in bigger trouble. We've got a lot more to go than America. Let's go in, and they would then start buying U.S. currency and start buying U.S. bonds. That would bring yields down and probably put a bit under stock. So it's all interconnected here. It looks to be one heck of an interesting day. So we're going to keep watching the internals. They break 3,900, particularly if they break 3,900 and it brings in some cascade selling. This could be a very tough day. So keep your seatbelt fastened out there and hang on.
It's interesting. You know, just a couple days ago, Art, we were looking at that 4,100 level. People were saying, well, you know, maybe not as important as you can get to maybe 4,220. That would justify the argument that maybe the October low was an important one. That seems to be far in the rearview mirror this morning.
Well, it is, and that's why, as I said, Carl, you have to look at all of these cycles, okay? Some of us don't have a computer. We're still using a slide rule, and that told us to be careful of a possible interim low between the 13th and the 21st. This could be it. If so, get ready for the Santa Claus rally. So we're going to make a low here in one of these next several days. Maybe this is the one, and then the end-of-year seasonality should kick in.
We'll end it on that hopeful note, Art, and I imagine we'll be talking in a few days at the very least. Thanks so much for coming to the phone.
My pleasure.
Art Cashin.
Okay.